Jordan, good to see you talking about one of your favorite topics, taxes. And today it is, are you tax ready for retirement? Taxes, of course, don't disappear in retirement as much as we would want them to. In fact, understanding tax implications becomes even more important. So let's talk through 4 questions that you should ask your advisor before you retire. First question, how will my tax situation change once I retire?
I think taxes are fun, Aaron. I know I'm kind of crazy to say that, but when you
Yeah.
retire, you have a lot more flexibility on what tax planning things you can do. Because when
Mhm.
you retire, you have less income, technically, from your wages, where you might be able to fill up tax brackets in creative ways, doing Roth conversions, looking at the tax bracket you're planning to be not only now, but for long term. And how do I fill that up? Well, tax brackets are historical lows. Obviously, we got to be wise and strategic and not hit the next level, the next tax bracket. But there's a lot of creative things you can do when it comes to taxes. Some of them might be even waiting a year or two to turn on Social Security because you may be able to do some good planning and pay 0% taxes on your Social Security benefits. So before you retire, have some questions, get some answers, and have a plan.
Right, because you might think your taxes will be lower in retirement, but that is just not often the case. And then the next question is something you were just touching on. Are there strategies to reduce my tax liability in retirement?
There's a lot of strategies, and just kind of go back a little bit. If you have a large IRA or 401k, you might think, oh man, I'm going to be lower taxes. I stop with my wages, but you've done so well for yourself that your RMDs, your required minimum distributions that you're
Hmm.
forced to take out, actually might actually put you in a higher tax bracket. So some strategies you can do ahead of time is be tax diversified, maybe put money into Roth accounts or tax-free accounts so you're not going to get blindsided by those forced required minimum distributions. And that might put you in a higher tax bracket. That might put you in Medicare excess premiums. And that might blindside you, which could actually negatively impact your financial situation.
I have a spider that is coming right down that wants to be part of our conversation right now,
Well,
Jordan.
we invite all.
Well, that's
It's
good. Hopefully
entertainment.
he is tax diversified. All right, the next question that you need to talk through is, should I consider a Roth conversion before I stop working?
I think when you have a plan, that plan will dictate whether you want to do a Roth conversion before you stop working, because you might have some extra income that you can pay the taxes when you do that Roth conversion while you're still working. You might not be in that higher tax bracket. You might have some wiggle room where you might want to fill up the tax bracket now while taxes are on sale versus what they may be in a few years. So with the plan, that'll give you some good guidance and leadership of how much and if you should do a Roth conversion while you're still working.
And then the last question comes down to your withdrawal strategy. What are the tax implications of withdrawing from my various accounts?
Yeah, so we'd like to divide this into 3 major tax structures. Your tax always account, your tax deferred account, and your tax free account. So you have money in your tax always account that's usually a brokerage or your checking, your savings. Maybe you have some money in CDs there that you're being taxed on that interest. You're being taxed on any capital gains or dividends, and that's in your taxable bucket. Now, in your tax deferred account, that's your 401k, your IRA. You actually are not taxed on any interest or gains on that until you take that money out of that account. And that could be in the form of distributions, or maybe you're forced to because of those required minimum distributions. But that year you take it out, you pay taxes on whatever dollar amount you take out. When you have money in a tax free account on that top triangle, you can have $1 million and you truly have $1 million, because when you take that money out, that $1 million is tax free. But if you have $1 million in your tax deferred or your IRA or 401k, you really don't have $1 million because you haven't paid taxes yet on that. And who controls the tax rate? Not you, not I, but the IRS. And they can
Mhm.
control what portion of that IRA you get to get. So you need to make sure you're tax diversified and look at the different structures and how do you play around those to get more money, maybe in a tax free account.
Mhm. Well, it's good to know there are strategies that we can consider right now, and we have talked through many of them in greater detail. People can find those resources on your YouTube page, so we want to point them there as well. But Jordan, if somebody just wants to call you to talk this through, how can they get a hold of you?
Yeah, we love helping people. We love providing leadership. They can call our main number at 847-499-3454. Have a brief conversation, understand your goals, your concerns, and then see if we can align together to put a plan to give you peace of mind.
Great. Jordan, thank you.
Thanks, Aaron.